Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Thanks for stopping by. Let's take care of business and let's get on to it. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room, but if we get into real time, we'll do it. Not the trade calling, but the real time. Grab your pen and paper. I'm going to give you a couple of statistics, but before we get into that, I have an important announcement for those of you who are currently Bookmap subscribers, and also those of you who are interested in Bookmap and just seeing what this is all about and how can you use order flow, but how can you get started with order flow. And Bookmap asked me if I would share this with you, so I'm going to do that. Now, there's a guy you want to know. That's Bruce Pringle. He is the head of education, and he's doing a special series on onboarding to Bookmap. And even if you're not currently a Bookmap subscriber, you might want to check it out. You'll get a chance to look a bit under the hood and see what this is all about and why we use a high-tier order flow tool like Bookmap to help us with our edge. And the business of trading is about edge. And if you understand order flow, it might, help you achieve that edge. So what is going on here, there is a Bookmap onboarding series, and it's weekly on Tuesdays. And what it's about is Bookmap basics, how to set it up, installing it, running it, how to connect to the data and the different data plans, the add-ons, what are they? The sweeps, the absorption, the MBO bundle, market by order, stops, icebergs. What are some of these? The resources and any answers that you need, any questions you have, that's your opportunity. And it's you can register and you can see the different dates. So that's something I want to remind you guys about because it's something new. And if you've ever thought about Bookmap, or even if you're a current user of Bookmap, you might want to brush up on some of the things you can do with it. And if you're not familiar with Bookmap, you might like to see how easy it is to install it, operate it. And then, of course, there's education, not only here in the Trader Lab, but education throughout the Bookmap server on stocks, options, crypto, order flow, of course, market maker behavior, swing trading, algorithmic behavior, and a lot of other things, and it's all available at no cost. So if you're inclined, take a look. Okay, now this is yesterday. Now, if you guys have been following the stream, and I'd like to do this, now this is Investor RT. It is my higher time frame platform. It is very well when it comes to volume profile and the profile. This might be the premier software package for analyzing the auction. And since I trade the auction, having the best tools, in my opinion, are very important. Just like with order flow, you want to have the best tools because we are in a competitive environment. So for me, it's really about the yield, not the cost, the yield. And if I can do a better job with something versus something else that I'm going to try to make work versus something that is really designed, I'm going to lean with the product that is really designed to accomplish the task. And everybody has to decide for themselves, of course, what tools they can use and, of course, what they can afford. Now, here's what's important. If you guys remember, coming up on the tariff day, call it, which was Friday, this was our target. We were long coming here. This is the auction. And that set up an exit near the high of the day. No clue, naturally, just that we have structure and trades that we do in Trader Lab. And then once it started breaking down, it set up shorts. And that brought us We were looking for it to take out this low on Friday, but it just missed it. But what did we know? There were stops under all these areas. So that set up Monday, which was this, and we opened down here on Monday, just reminding you, we tested this level here. It was a short. We then took it down to here, 50, which is the low of the day. That was our target. Then the market bounced out off of here and we got a long going. And once we got above here, it was the squeezeteria. And then it was to come back here, which we didn't quite get to day before yesterday. But that was our target, was coming up here. Now what? Yesterday we opened and we test where? 22.5. Now we went a little bit below it, and that sets up the long yesterday with the target here, and that was the high of the day. This is trading the auction. Now, the other thing you have to understand about the auction is how the market gets to wherever it goes is all random, and then we have to, as day traders, we have to deal with rotations. So this was yesterday's target. Now what? Let's go into the now what. Here's what. The market is sellers. That means shorts, okay? Shorts, the gap, more shorts, the squeeze. Then what? Down the squeeze to the target. Now, the possibilities are the following. This is too high, and we do this. Or, and my inclination is, come back up into here, because we have shorts sitting in here. And if the market was disrupted, and let's say by a news event or just because we hit a target, who knows, right? And we get this reaction, then if the market now knows that maybe it's not going to be as severe as it worried about, because what the market looks for is somewhat predictability. And by predictability, kind of even though it's rotational, it's sort of like, yeah, don't shake the tree too hard. But when there's unknowns in the market, it can create fear and overreaction. So potentially, if this is too low, that's too high, and we came back to the fair price, we might have to rotate up here and find what's unfair. This is how it works. Too high, too low, maybe, and then maybe push to squeeze some of these out. I hope that makes sense. This is the higher time frame. Now, let's take a look at statistics. And remember, you have to bet these for yourselves. And this is just a gauge of possibilities. Statistics are never absolute. The thing that supersedes a statistic, because we're in an environment that's random, is the structure and who's off sides. So what do we know? Too low, longs in here. And what happened here yesterday? Well, we came down, we tested the support, which is right there, and there's no precision. We got our sellers in here. So weak longs coming out. Then I'm going to give you the stats. Opportunity to get long, to take out this high and squeeze the buy stops above here and come to our target, which was the high of the day. Then today we open inside a range, lower inside a range, get selling. And it was two-sided, so it was a very tough trade in the morning because we were rotational, very annoying. And then we're looking to take this out and come up in here. That's the plan. Now, what happens? Good luck with that. This is trading. So we open lower in range. Here's a couple statistics. There's an 8, and I'm going to just give you some sense. There's a 93, and you got to vet these, okay? 93% probability we take out either the ETH high or low. Let me get to Bookmap. Got to get back to the RTH open. So many trades, so little time. And for me, my least productive condition is tight rotations, because everything looks the same to me when I'm trading. You know, by that I'm saying is, if it's random, what do you do? You know, great question. Because you can't predict. What do you do? Well, you wait for your trades. and they either work or don't work. You get risk neutral, you scale, or you get stopped. I mean, this is trading. There's no secret sauce, and there's no way to avoid stops and the rest of it. It's just the business we're in. Casinos can't avoid paying the gamblers. Just saying. So let's take a look at the structure here, in relationship to these targets. Now let's look at the story. 60.22.5 is a important location. The ETH low and yesterday's low is here. Is it interesting to you that we test yesterday's low in the ETH and we don't take it out? That's door number one. That's the first thing that tells me maybe we're going to lean to the north side. Now, here's another piece. The overnight volume point of control. Statistically, there's an 83% probability we get there. The overnight mid, I hope you're taking a note of this. 83% probability we get there. Let's see what else. Previous point of control, a 70% probability we get there. Yesterday's high. I know you're interested in this. Maybe. Let me find that one. 85% probability we take out either yesterday's high or low. What do you think? Then what? You're asking. 6,100 is an important price that we were bouncing around that we might come back to. It's also a strike. This is a single 61.12. This is it's a low volume area. This is an outside edge. And what this is created from, and I'm not saying we're going here, I'm just saying is it's on the hit parade, is when we had this sell-off on the tariff day on Friday, we ran quickly with the aggressive selling, and this layer in here is not auctioned. So we can come back up through here. Now, that's not a recommendation. It's just possible, right? And let me see if there's anything else here. Oh, yes. And taking out the first hour's high, 69% probability. Let me show you where that is, and then I'll get into, I think it's right there. There, the IB high or the IB low. And we could take out both. It doesn't mean we won't. But remember the top of the stream. What's the condition of the market? The market's short from Friday. And what happened this morning? Well, two-sided trade. I think, stepping on a rake would be probably more pleasant. So it's a hard trade, okay? So let's go take it RTH open. And by the way, if you have questions, please post them. If you're in YouTube, thanks for visiting today. I hope you get something out of this. By the way, the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. There's no cost to join the Bookmap Discord Trader Lab community. There's a library of webinars on this process that you see here daily. And of course, the community of traders that have come together to do better. And that is by leveraging their collective experience. Our senior trader has over 50 years. I've got 45, both professionally and out here with you. And then the full range of traders from newer developing traders and everything in between. So it is a very good environment for traders. It is a serious environment. It's about the business. So it's not it's not kiddie land. An alert target has been reached. Settlement. That's a statistic, by the way, also. So let's take a look. Market opens here. Now, I found this not a good morning for me, and I hope you understand that the real world of trading is never easy. It is always random. So what I was looking for was I'm looking for the shorts to get squeezed. So and all this is posted in Trader Lab way before RTH opened. And I showed you that higher time frame chart because it kind of gives me a sense of what might happen. The thing I don't know, and I don't believe anybody else knows, but maybe they do, but they haven't told me, is how we're going to do it, if we're going to do it, and where we're going to do it, and when we're going to do it. So if I think we're going higher, how are we going to do that? When are we going to do that? That's all part of the randomness. So I don't have the answers for that. So instead, my answer is to have structured trades that when they show up, I take the trade. And then if I recognize change in the conditions, I'm going to try to adjust to get an alignment. And in this condition, if it's rotational, it's problematic. Because if I'm looking for a long, I only might get a rotation and then come back. So it, does present challenges. So this is the RTH Open. This is called Developing Volume Point of Control. What it is the highest volume, and the market is rotating. I come down, I come up, and I'm going, okay, I have two-sided trade. Now, we were discussing this morning in Trader Lab that this was a mean reversion or a balanced configuration. Balance is where you just basically are sloshing back and forth. And if that's the case, you're going to be trying to find outside edges to fade, to come back to balance. This is balance. And then if we come outside, you're looking to come back the other way. So this is kind of what we're trying to do. So let's look. So if you're in this thing, as soon as you come down, now we have some statistics. I got to go back and remind you. Overnight high has over a 90% probability. Overnight mid, I think, was about 83% probability. Overnight VPOC, about 83% probability. And, when this is going on, it's like, well, are we just going to, where are we going? Are we going up and not looking back, or are we going to come back? And all of this is just like, well, I don't know. So, and my job is not to predict. Wow. Something's blasting me in my ears here. Must be this. That's a target, by the way. So we're looking here for rotational trade. Post your questions if you have them, by the way. And thanks for visiting Trader Lab. So this is called VPOC migration. This is suggesting potentially we're going to go higher and that this is too low. I'm going to label it. I call them variable high volume nodes. It's just a term. And what I'm doing is I'm tracking the change in the volume. And the way I think of this is if this is too low and I leave it, gee whiz. Sorry, I got other alarms going off here. Because that's a target that we're just going through right now at the current high of the day. And what was that probability? I know you're going to ask me. Let me give it to you. 70% probability, and you have to vet this for yourself, that we get to that target, which is there, which is where we are right now. Okay? And what do we have? An 85% probability of taking out either yesterday's high or low. Considering the market is short and we're in the squeezeteria, I'm going for this. So if I'm in the Trader Lab and I am long, which I am, I'm just peeling off trades. And then that's that. And that was all in the Trader Lab. So let's go back here. So VPOC migration. This is suggesting potentially we're going to go higher. And the rationale for this, for making that statement, and by the way, anytime I say it is going to do something, the word maybe is in that, because maybe it's going to go higher. So here's what. Too low, this is the new retail price. So what I'm looking for is it to push off and go here. That's what I'm trying to get to. And if it does the opposite, then this is support. And I have opening swing low under here, and there's going to be stops. Let's mark the swing. got all kinds of stuff going off here. Hold on. Got to take care of a little business over here, guys. Let me. Okay. 1 second. I typically don't trade when I stream, but couldn't help myself. Okay. So right here, we're either going to push off or roll down. And I know you're saying, well, that's brilliant. You knew that also. Well, so do I. But I don't know what it's going to do. Now, if you know what it's going to do, that's a different conversation, isn't it? Because you'll know something I don't think any of us can know. And that is what's going to happen next. So this is the retail price. This is too low. And the opening swing is here. So I know if I rotate down and I can come under here, that I've got sell stops under here. That's what I know. I don't know what it's going to do. So let's continue. Break low. Not good for the longs. This is now my support. Okay. Take out the stops. Now, what do I have down here? I got overnight mid. I got overnight VPOC. I saw this in here, this liquidity, and this guy pulls. You'll notice they add 800, they pull. When I saw this, I thought to myself, okay, now down here. So anyway, that's what I thought. And let's watch. Now that's a report, okay? So I was on a short here and I was going for this. And needless to say, I got taken out of the trade. That's just, that's life in the fast lane. And, how we feel about it emotionally is one thing. But now let's look at this. Now, a variable high volume node, as I have defined them, is a price that's too high. If we don't push this way and we break this side, trying to remember. Oh, I know what I was talking about in TraderLab. I was talking about a short, and I think it was from here, either there to there, or from here to there. And yeah, I did actually. I took this short because when this happened, no clue. I cannot respond to this. But this is a buy sweep, and a buy sweep sets up the possibility of a short, and it would happen here. Now, I could not respond to this, and I posted this in TraderLab, and it's probably was confusing. This is my variable high volume node. This was too high. Now, it's fast. So right here, I see the sweep, so I'm looking for a short, and I see my response to this. So then the next target is, let me make sure I got this right. So this is too high. And the short, here's the thing. Long sweep reversal. Short selling here, which can mean a short sweep, potential higher. Right here is a trigger. Let's look at the microstructure. This is too high right there, and this is a little micro node. This is a micro auction. It's taking place right here. And if we reject this, we can then come down to the next one, which is here. And if it's too high, we can reject it, and then we can come down. So this is a short for me, and here's the trigger. So when I see this, I have no clue. I'm sitting here, deer in the headlights, like what's going on? Because I can't react quickly. But what I have on my chart is the level there. That's what's on my chart. So that's what's important. And I had left it. So if I know the sellers were active up here, if I come back to it, are they going to sell it again? Isn't that an interesting question? So the answer is yes. So now I see my seller. I have my high volume now here. My resistance is here. My resistance is here. I have this right here. I break low. So my buyers are here. My buyers are here. Buyers are taking the ball. Right here, my sellers are in control here. So right here, no clue. Chop, chop, auction, break low. Sellers take control there. Entry is here. Stop is here or here. And then it's come across the range. Let's see what it does. To there. Okay? This is the same trade I took from over here, wherever it was, somewhere over here, going for that. And why would I go for that? I know why you're asking. You're saying, well, how does he know? How about this? No clue. So that takes that off the hook. 83% probability to get to the ETH mid and the ETH VPOC. Now, what does this mean? This was the highest volume or retail price from the ETH. Currently, up here, this is the retail price. If that's too high and I reject it and I can get short here, then where might I go? Get in a car, drive back here. This was the retail price in the ETH, the last auction. If at the moment, remember, this is dynamic. If that's too high, let's go back here. Is this really too low? Let's find out. There's the ETH low. So now let's watch. Now, right here, I see absorption. This, I should say, is sweep. This is, now remember what at the top, what was I looking at? This is how Bookmap can help you, the tools. The buy sweep sets up the sell here. And it's also location, location, location. Think real estate. None of these things operate in a vacuum. It's a confluence of elements. So that's the short. This is the target, and then going to zero, right? Who knows? And for me, I trade primarily the targets and I should say trade management, and then whatever happens, happens. So here I get this sweep. Remember, opposite of this, sweep. I'm looking for a reversal. Where is it going to come? No clue. Let's watch the trade management now. So if you were not out here, which is a target, remember 80%-ish probability, then you're going to be managing your trade. When you're seeing this, you're anticipating a reversal. So let's look at microstructure and just see what this would look like. So looking for a reversal right here, sellers are in control. Microstructure, let me open it up for you. This is one way to do this. It's not the only way to do it. You could do whatever floats your boat, because this is all based on time frames or fractals. And for me, it's a fractal. My sellers are swept here. They're sweeping the book. That sets up potentially a counter rotation. It doesn't have to do it. Look, we did it there. Where's my counter rotation? Didn't happen. So as far as I know, this is too high. The sellers are here. It's too high. Sweep here. Warning, Will Robinson moment. Buyers are above the seller here. Warning, warning, warning. Resistance is here. Right here, the seller gets below the buyer. I'm feeling a little better about it if I'm holding a short, because now that's my resistance. Sellers are here. What's going on down here? Well, I got the sweep. I've got iceberg buying. I've got sell stops coming out. Now, here's a little something. I'm just going to share a little something with you if I can. Let me see if I can do this. Yeah. Stop and iceberg detector. This is just a little nuance, just a little something I fell over in my travels. And it's the only thing, since I don't use indicators, it's the only thing I actually use from our indicator concept, basic indicators. We came down here. We have 30 sell stops coming out, right? Thanks for playing. Broker sends you a gift basket. Have you ever gotten a gift basket from your broker? We make a lower low, and there's 9 sell stops. I call this stop divergence, because what are we going down on? Well, we're going down on sellers, right? But what kind of sellers? That's always the question, and we can't tell. There's delta, which shows us aggressor. Delta's made up of initiative sellers and sell stops because they are market orders, so they look like initiators. That's the delta. Then I have buying icebergs here. Okay? So what happens over here? 30. What happens down here at a lower low? 9. What's the term we use? Divergence. So right here, and I can't tell there's 9 here until I reverse out. So I've got seller, seller. Sellers are here because this buyer went under the bus. Buyers are here. That's the rotation. These guys get stuffed. Sellers are below the buyers here. Sellers are here. Sellers consume this guy, going lower down to the sub-basement, right? Stop divergence. Don't know at the time. Lower price, less stops. Are we going down on new sellers or are we going down on long liquidation? Also, what's happening here? Absorption. But we don't know until here, and we have to get above this because our sellers are here. So I got my sellers here, here, and here, my sellers. So resistance is here, support is there. Watch. Support is here. Now, what do you do about this? This is very hard, isn't it? Are you going to pick the low of the day? Me, not so much. Why? Not my thing. If I fall over the low of the day, it's strictly because I tripped. It's not because I know where it is or anything. So what I do is I know I don't know and I accept I don't know. I'm not in the business of prediction. I'm in the business of alignment and trade management. So here, as far as I know, we're going lower, right? Why wouldn't we go lower? Sellers are here. Buyers are here. This seller's below this buyer. This seller's below this buyer. We could still be going down or you're out of your trade, whatever. And right here, I have no clue. So let's look at this structure here. So what I have is a consolidation, and this is what a consolidation looks like. It's rotational trade, and this is called a fractal. I'm going to draw a little box around this thing, and you're just going to see where the box shows up. It's outlining this out here. This is called the low volume node, top of this. And this is out here, there's no volume because it's stopped down there. There's only 12 contracts, so exhaustion at the low of the day. Only 12. So this is my little sandbox now. Resistance, support, and the high volume in here is at this what's called a high volume node, and it's right there. So really what this is this is the auction, and this is where the high volume is. And either it's going to be too high and I'm going to break away, or it's going to become too low and I'm going to break away. Let's see what happens. I break away. Now, where's support? There's 2 places. Let me extend this. Just going to show you a little idea. Where is support? Isn't it there? Doesn't resistance become support? Is that a long? Is that a long? Is that your volume? Does your stop go under here or even under here once we break high? Just asking. What do we think? I don't know. Let's see. What does it do? What does it do? Is this making some sense? Can you guys see the long? Are you guys tracking? How are we doing so far? 10:42 and 11, so that's 9:42 and 10:04. Well, we're not there yet. Any questions so far? That's the long sequence. You guys have questions, post them. How are we doing in the Bookmap Discord Trader Lab community? Is everybody conscious? So let's look at this. So this sets your long up here. Now, there's two ways to do this. It's a long or it's an exit of your short. Doesn't matter. Now what? We come back here to the VWAP. Now, I believe I posted this in TraderLab, and I think this disturbed a few of our traders. This is the VWAP, and there's a couple ways to think about this. This is not a structured trade. This is something I kind of did, and I mentioned it. I think it was here. I can't remember without looking at my other computer. But the idea was to sell this to come back here. I don't know if this is the one or if it was a different one. Let's see. Yeah, I took this to come here. And I got scaled and I didn't get my target. So I was kind of scalping this kind of stuff. And that's not my skill. I'm not very good at that. I mean, I don't, I just kind of trade rotations, So the idea was to get there. So I put the trade on, and you could see the trade right here. I come up, I see my VWAP. I'm at an outside edge. This is the primary thing. I was looking at this going, well, there's a distribution, and there's right here is a separator, and I might come back here to the high volume. So this was actually a mean reversion trade. And here's the actual trigger. So I see my sellers here. I got my buyers above my sellers. For all I know, we're still coming outside. But I'm at a location right there. And that separates, so you kind of see what it does. It separates this distribution of volume from what's going on down here. So when I looked at this, I said, well, that's an outside edge. There's the VWAP. There's the mid. There's going to be stops at the mid. Thank you. And the VWAP. And now I'm looking for a short just to come back. So let's look at the trigger. Buyers are here. Outside edge. You can see if you look to the right, micro high volume. This is a triggering structure in the TraderLab. I'm going to draw a little box around this thing again so you can just kind of see what I do. Now, I'm not drawing boxes when I trade. And I do suggest if you're in TraderLab or wherever you are, that when you do replays, if you're going to use microstructure and price action and order flow, that you draw. So you train your mind and your eye to start recognizing structure. You won't be doing this, but after a while, because you'll recognize it. So here's what's going on. Coming up to a location, sellers are here. I got a buyer here. I got a seller here. As long as the buyers are still in control. So here's the seller. If I get below this buyer, then we might reverse. But I'm not at a location. I just go, well, that's all right. Now I have a buyer here. As far as I know, going higher. Where's my seller? Here. If my seller gets below my buyer, and now we're below this seller, this sets up a short right here. So I took a short here. I'm just explaining the trade to you. Let's watch. And where does it come back? This is what I wanted to show you. There. So what you can do with this, either you're going to enter here if you're able to read it, or you're going to enter here. And let me move this again so you can see the structure. I'm going to move this out. So you could see all we had was this. Now I'm going to, and that's that. There's your short. And by the way, what did we have over here? Wasn't it the same thing? There's your long. There's your long. It was there, actually. There's your long. There. There's your short. There. These are triggers in the TraderLab. Okay? So if you took this, you got to scale. If you took this, you got to stop. That's the way it is. Okay, now let's look a little further. Hey, now we get VPOC migration. And what does this become? Is it possibly now support? Maybe. And what's this up here? Variable high volume node. It was too high. Now this is two-sided trade, and it's really not my favorite thing. Now here's what we know. This was too high. So the possibilities are rotation from here, or since it's 9:30 and we have the IB stat, which is the taking out the IB high or first hour's high, and you have to vet this. There's almost a 98% probability we take out either the first hour's high or low. And in this configuration, taking out the first hour's high is about 69% probability. So what do you think of that? And so we are looking with that probability to take out this first hour's high, which is right there. And we also have this as resistance. So we have resistance and we have this as a target. So let's watch. Resistance. Now, we talked about this in Trader Lab, and I have to tell you, it was quite annoying because we know if you're in Trader Lab that this right there is resistance. So when we think about these trades, at least when I do, since I'm trading the auction, I know that we might react here. And I posted that before we got here. I says, potential reaction. That's all it is. I don't know. You don't know. What I know is what did happen. And then I make an assumption that if I got selling up here last time I was here, that those sellers might still be here. So I'm going to use it for a scale. And the other part of it is I can exit, I can reverse, or I can do nothing. I can just target it because I anticipate a reaction. And then I don't know after that anything. So let's see what it does. So what does it do? Comes up here, reacts. There's our sellers. So let's go a little further. What does it do here? Now resistance is here. Resistance now is here at this high volume node. So I got micro high volume here. I got high volume there. And then I have a high probability of taking this thing out. So what do you do with this? Well, you either hold long or you scale or you manage your trade. Those are the possibilities. What you do is subject to your plan. So we take this out. Let's look. Now, in the Trader Lab, we are in an interesting condition here because statistically, we are leaning to the north side, longs. But we're also in a two-sided trade. Now, we have two trades here. One is called the IB continuation trade, which is really suited for a directional market, and this is a rotational market. We also have something called the IBF. The IBF is a mean reversion trade, which is a short. So I'm going to show you what comes next. Not knowing, like all of us, we don't know. So I come up here, we get our stat, and we have, let's go back to where our targeting is. We have a target here, there, yesterday's high, and this. This is our target. So that's where we're trying to go. Any of these, all of these, doesn't matter. Who knows? Part of the joy. No clue. So, oh, by the way, let's just come back to one little thing. Where'd this 77 come from? It's right there. And where's the stops above this high? Remember? So we're looking for the squeeze. Now we can go anywhere, and higher. So that's kind of where all this stuff comes from. So that 77 is sitting. So that's a target. Remember, 85-ish% probability, and this is a target. And then after that, no clue. Not important. The thing about trading, at least what I've found, is it's really about alignment. It's not predicting. And using statistics to kind of give you an edge. But the problem that we have is randomness. And it's always random. So, sometimes it's a bullet train. It goes right there and you think, gee, I'm so smart. And other times you're getting body slammed to the mat because you're trading rotations trying to go towards statistical probabilities. What's the difference? How about nothing? It's just the way it is. Sometimes it's two-sided trade. Other times it's directional. Other times it starts directional or gets directional and then changes back into rotational. This is part of being in Trader Lab, is you'd have an understanding of how to narrate the changing conditions. And then hopefully, if you've defined it, you will then know to switch to a different plan for the condition. And then it's all fractal and time frame oriented. So right here, going up, here's our distribution. Here's our volume. Right here is, you'll see it. I'm going to draw a little box for you. Now, when these things happen, I certainly don't know that it's the high or of anything. I mean, there's just no way to know these things. So I don't try to know because I can't know. So if you look at this, this is what's called a distribution. Too high, support is here, and the retail price is there. So think of it like shopping. It's a store. So in here, you notice we pause and we rotate. Well, actually, this is support also, right there. When I break below it, it sets up a short. Now let's just watch the structure. I should have drawn it there, but we'll live with it. See where it comes? There. That's a short. Stop is here, and you're trying to come here. And then wherever. Okay, this is now the VWAP. You'd be going to VWAP. And then it sets up another trade called VWAP to VPOC, which is this. You get your sweep. I know this is a lot of trades, and you might not be interested in this, but this sets up your short. Here, this sets up a scale. This is a next target, and then we're looking for a long to come back here. So let's see it. There's your sweep. This is your location, and we're coming to an outside edge. What happened up here? Outside edge, too high. It's called a low volume node. Let me just throw this in here for you. So what I'm identifying is boundaries of the auction. In other words, where does this thing rotate to? And if we thin out in the low volume area, typically, so this, we went above it, chop, 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 auction, break away from it. It's isolating this distribution or auction and saying it's at the moment too high. That's why we break away from it. And then that sets up the short to come across the range outside somewhere. Part of the joy is where. Well, let's go try to take a look where. Where's the low volume outside edge? Well, there's one there. Let's draw it, put it on the chart just in case we come down there. So what I'm doing is, if I'm trading in a two-side configuration, it's called mean reversion. And the joke, of course, is, yeah, it's mean. So I know out here and I know there. You can see these notches in the profile. And I'll just let me get these things in here, and then we'll go take a look. Somebody was asking me about a specific time. 9:42. Oh, I think I passed it. So here's the sweep. So if you're holding a short, you're looking for the outside edge, which we don't know where it is. What we do know is this volume down here. Remember what I'm doing. I'm isolating the volume. So this auction was too low. This auction is too high. You see the symmetry of this thing? So the low volume is here, and I got low volume here, and I got some here, because I got a little high volume hiccup right there. So I know if this is too low and this is too high, this is my sandbox. So I can take a short to come back here and to come out here. And then I'm just going for these outside areas somewhere. And part of the joy, we don't know. But there's my sweep. So I got sellers here. Micro high volume is right there. You can see it there. That's resistance. I'm going to label it just to help you see this. I'm going down in time frame or fractal. So the sellers are here. Sellers are in control. Buyers take a shot here. I'm below the sellers. They fail. There's my micro high volume. I break away. I test it. It's too high. I break away. I test. It's too high. I come down here. My sellers are in control. I get my sweep. Warning Will Robinson moment. What do I do here? Great question. Well, I've got my outside edge here and here. So I know if I do anything, this is really where things will get nasty if I get down here. Otherwise, the market can slide down out here somewhere. That's just the way it is. So let's watch. Right here, I come across above the sellers here, and I got the sweep. My volume in the micro is here now. I break high, which means the buyers are now in control, and right here is where the sellers are in control. So resistance. See the behavior? I come back down. Sellers take control again. Sellers in control. Buyers are here. So I know I've got sellers and buyers. That's what I know. I don't know anything else. I break high. That right there, my friends, is hasta la vista. Now, I haven't seen any of this, but this is kind of the way this works. So this sets up a potential long, and then you're looking to come back outside. And it's all a matter of your trade plan. Let's watch the behavior. What was too high? It's this. What happens? What is that called? Resistance becomes support. So, and this is the VWAP. So this sets up a VWAP to VPOC. Now we're not trending. It's a rotational trade. So this is a mean reversion trade to there. And then remember, the thesis at the top of the stream is the market's short and we want to squeeze. So we're looking to squeeze, and that sets, and 70% probability, don't forget, over 80% probability, don't forget, and this is a high volume level at 77.5, which is important, which is another target. That's it. We are now current. Let's see what we got. Questions? How are we doing in YouTube? Please give a like. So let's try to So depending on what you're doing here, you're either holding along, but this is a key level up here. Let's see if I can show you where it came from. Because everything, this is Investor RT. There's a reason for everything. It's this level here. So what we did is we got yesterday's high. This is yesterday. We are squeezing into here. Now we can, if we get rolling in here, and I don't know, that's not my job to know, we can come up here. Now we might not do it today. It's not our job. Doesn't matter. You know, what matters is, I find the important element to this is that we have shorts from here and their stops are up here. And this was our target when we were on the long side on Friday. So I don't know if we're coming back here. It's not my job. What I know is I got buy stops in here. And as long as I know that, and I got my selling in the morning, this morning, and we took out week longs from yesterday, which is kind of how the market works. It goes up to go down to go up. Market goes up to go down, goes down to go up, goes down to go up, and then whatever. It rotates on itself. So that's part of market mechanics. So do you want to be long or short? Well, subject to time frame, you could be doing the following. You could be trading rotations or you're just holding longs and you're managing in a higher time frame. And I've got to say that because I don't know what your, everybody's different when it comes to how they handle this. Or you might be done because we got our probabilities, over 80% here, and this is the next target. You could be done. Or you're going to look at other structure. This is an outside edge. It's a low volume node. Let's take a look. See if you see something familiar. Where's this outside edge? It's out here. So let's see what happens. Now, outside edges are at swings, and you always have to look left. And you should write this down because we get very focused and myopic. It used to happen to me a lot. I'm right here. I'm going, oh, is that a long? Meanwhile, where's the stops? They're there. They are under this swing. So if I can get under here, get the 141 stops out, this can be a long for me right here because I'm at an outside edge. I pick the stops, and then I'm looking to come back to the high volume, which is here. So this is a long for mean reversion longs in alignment with the trend, or nothing. Can you see where this low volume outside edge is? It's right. You see where it is? It's there. There. What did we do down here? These are too low at the moment. So if I form a new distribution or balance up here, if I come outside, and especially if I pick these guys off, all the retail traders that have their stops sitting here, who do you think those stops are? Retail traders. Well, if I have the selling, which is the stops, and the buyer gets above there, this is a potential long, and it's not a recommendation to come back to the volume, which is sitting there. So I'm going to put a little mark on this thing because it's the high volume, and it's a target. Let's see if we ever get to it before taking a stop. This is as complicated as trading is. It's like maybe we'll get there before we get there. Right? Isn't that trading? And then if we can get here and scale, then the possibility is to come back up to the other location there. And that might be it. I mean, it might just be a rotational trade or nothing. There's no way to know. So let's observe it together. Questions? With the VPOC migration down? No. I am basically trading this at the moment. This is my sandbox. I'm outside of yesterday's range. I'm above the retail price from yesterday, the highest volume. I have an outside edge, which can be there or, anywhere. It can come out here, no problem, and take me out. But what I know is I already got the guys here. And that gives me some sense of a viable long, because if I don't get selling below here, there's a reasonable shot to come back here. That's what I know. Now, I don't know what it'll do. This is trading. I don't call trades because I take stops, There isn't anybody who trades that doesn't take a stop. You got to take a stop because you want to protect yourself so you can take the next trade. It's not about being right. Just remember how casinos operate. They're not in the business of being right. They're in the business of playing games that have an edge. That's the business we're in. Do I have an edge getting long? Maybe I do. But the fact is, what's going to happen on this one individual iteration? That part's random. So our fear is generated from uncertainty, which we all are fearful. With a lot of practice, you can kind of disconnect a bit from it. But you're always going to be kind of, there's always that sense of, should I wait? What should I do? Those questions. And the questions are generated by uncertainty because anything can happen. So how can you get around constantly being in a state of uncertainty? Well, the way around it is not to seek certainty because you can't have it. So if you can't have certainty, what can you have? Well, you can have probabilities, which are uncertain. But if you have a positive expectancy or probability, just like the casinos, you'll accept the random outcome, but you'll know that if you play the game exactly the same way, that over time, even though you pay the gamblers, that you will extract the dollars from the gamblers. The difference is the casinos are not attached to the outcome. We are. That's our great weakness. I believe if you come to Trader Lab, I believe almost anybody can learn how to trade if they do the work. But being able to trade is a whole different issue and probably the largest obstacle. Because how do you function in this environment where anything can happen at any time? You know, somebody trips over a cord at the CME, there's a tweet, you know, anything, right? And that's the business, randomness. So you got to teach yourself to operate in an environment that is not your comfort. And that's, I think, the greater challenge than learning how to trade. Trading does not have to be complicated, but we cannot escape its randomness. So I think if you've ever thought about it, you know, why it's so challenging and why you're looking for certainty, it's really psychological. And in this environment, there's no certainty. So that's it. So let's see what happens. This trade looks like it might fail. We're coming back to a level. We did not get to what I think is resistance. So right now, this right here, the sellers are in control up here. The buyers were in control down here. We got to see what happens. The outside edge is here. So until it fails, it hasn't. Do I think it's going to fail? I always think it's going to fail. Do I do something because of what I feel? No. I need evidence. Right now, the evidence is the sellers are here and the buyers are here. One side is going to fold. Let's see what it is. And I'm kind of suspecting it's going to be this side, but until it does, it hasn't. That's just the way you got to go with this. So let's watch this trade. In the meantime, let me look up and see if you guys have some questions. Are you guys tracking? How are we doing? Now, I was trading in ETH. I was trading mean reversion. I had a hard time with that because the range got really tight. And I took a number of stops in there. And, you know, and that's okay. I mean, other than, you know, who likes that? But what the problem, at least I'm going to say the problem, the challenge really is when the ranges contract, it gets very hard because you've got to have really good entry and you have to really be able to understand market mechanics. And even then, it doesn't mean that any specific trader, one trade's going to, you know, be successful. This is a long. So and I was saying exactly what I was, quote, feeling. This looks like it's going to fail. I have something on my workstation, in my trading workstation. This is specifically for streaming, this one. Many years ago, I had a trade and I put the trade on and it was a short. And it, you know, I got a scale and it rotated all the way back. And I said, gee, I don't want to give this back. You know, I moved my stop 2 ticks, or maybe 3 ticks it was. And I got taken out. The trade never hit my original stop, and then it went down 30 points. And I figured, gee, that was pretty smart. Let me see. I moved my stop to save 2 ticks or something. And it cost me 30 points. That one That's the first thing I see when I start up my trading workstation is a screenshot, because our nature is to avoid risk, right? And fear, to be thinking and attached to the dollars. So yeah, I think I saved 2 ticks on that trade if I would have got stopped and lost the opportunity to have 30 points. So is that you? These are the things, and it's not in my plan to do that. I'm letting you know too. It was an emotional response in the moment, and I call that Hyde. We talk about Jekyll and Hyde in the Trader Lab. Hyde's the lunatic, and the lunatic, which is emotions, grabs control. For example, if Hyde was in control, I would have bailed out of this trade here, right at the bottom, against my support, right? Instead of waiting for this. Does that sound familiar to any of you? Well, introductions. Hi, interesting name. The footprint, is another representation of order flow, and it's numerically based. What I have found is simplicity adds clarity. When I have a lot of numbers and stuff going on, and it's not that I haven't looked at a footprint. I've spent a lot of years looking at footprints, and but this supersedes it for me because I can see the delta here. Now, when you look at a footprint, you're going to see delta also. But what do you do when you see this? You see the selling, and then you see the reaction up. What does that tell us? It's being absorbed down here. And why is it being absorbed here? Because the buyers were here, and I got above the buyers absorbed. And why did we come down out here and then reverse up? Well, the buyers are still down here. Now, what we need to do is try to come back over where the sellers were. And we are rotating in this thing right now. So it could do anything, right? So we'll see what it does. And it looks like now it is going to fail. We'll see. Remember where our outside edge is. It's out here. So we'll see what it does. These are not good days in the sense of they're hard to trade. For me, I'll get some good trades, of course, but along the way, these are just not good days for me because I tend to trade more often because I'm trying to trade the rotations, So it ends up where I get scaled, I take a stop, or I take a stop without a scale. It just tends to work that way. So a lot more activity in rotational trading. And it's not necessarily, unless the ranges are really good, it doesn't really pay for me. So I just try to get in alignment and do my thing. Notice where we came. So far, we're at the outside edge, and we can still pop this and come back here. So that doesn't change the context. If we fall out of here and get down below this, then, but we're still, notice we haven't come out under here yet. The buyers are still there at the moment. So what you've got is sellers are here, buyers are here, and we are in this rotation. The idea still is to come here. Don't know. And that's okay because I can't know. So it's just whatever. But the sellers look pretty much in control, don't they? Let's see how this works. One moment, please. This is just drifting around, and it's just not a great environment for day traders. So let's just see what it does. Try to keep an eye on it, see what happens. One moment here. Just junk, really. Sellers are in control over here, buyers. So we got our buyers under here, and we have resistance right now. It's like there, and there's your test. And then this would be where you're going to try to go if the longs hold on in here. So let's just see how it works out. This is hard to trade because for a lot of reasons. I mean, this kind of stuff is just not a good place to be operating, I don't think. But if it's going to work, it's going to come here. If it's going to fail, it's going to pull out under here, and then we're just going to come down again. It's been just really nasty, as you could probably tell. And these are not trade recommendations. This is a difficult environment to operate in at the moment. So we're just trying to see structure. So stops are going to be below here now. And the buyers might still come for it if we come out here. So we have to be aware of this. Unless we just rip down, which can happen. So we know this is our outside edge. We know support is this a high volume node right here. So we just want to try to watch what happens in here. Very slow. This is an algo. Takes a lot of patience, doesn't it, to try to operate in this. Now, even if this goes here, which is the plan on this specific trade, this is just not, I'd be very comfortable not trading because just if the conditions don't favor me, I just kind of sit back and I don't participate because look at the range we're trying to operate in here. That's like 3 points. So I'm showing you structure. I'm not showing you trades that I think make sense unless you have an edge in this. The answer to all of this is about edge. So for me, if I'm just looking at the auction and trading, a mean reversion process, which is outside in, I'm longs. And then, we're trying to come back. There's really not, it's just really nasty. So there's just no range here for this. You guys have questions. It's just a day. It is what it is, It's not up to us to make something out of, if it's not there, then maybe you don't trade it. So remember where we're trying to go. It's almost like you have all day. Because time, remember, I always talk about fractals. In our day trading world, time is not the element, it is the rotations. The time it takes to complete a rotation or for a micro auction to take place is the time it requires. What does it take? Why might this be a long? And why might this be support? Might being the word, because this is where the volume dried up. It's the outside edge. This is called mean reversion. And then where's the stops? It's above here. And where's my target? Here. And all I'm trying to do is come up here from here. Now, one of the things I want to give you a little something to think about. If the range from here to there was 12 points, 15 points, it's the exact same trade. The auction behaves in certain ways, and you can learn this in the Trader Lab. What we have to deal with as day traders is risk and reward and getting risk neutral, which is part of the process that I share in the Trader Lab, risk management. Would you have been able to sit through this? Or would you have done like I did? It was probably 15 years ago. I don't even remember when it was. That one trade has made me substantial gains over the years because it's in front of me, where I saved 2 ticks and I lost 30 of opportunity, 30 points for 3 ticks. I don't think that's a good ratio, but this is where I'm trying to go now. Ahead of this, by the way. So would you have sat through this, or would you have thought, oh, it's going to fail, and your emotions get you to bail out here? You see? That's what we do as being mortal and human and fearful. A professional trader does not do that. Does that make some sense? Justin, there's a link in the bottom of YouTube there. You can go to bookmap.com and you can get information on the different subscriptions to Bookmap. Also, there is a onboarding webinar that's held every Tuesday. You might want to look at that. And by the way, guys, if you're currently a Bookmap subscriber or interested and curious, what does it take to set this thing up? There's a whole library of how to use Bookmap, the different elements, but there's a special onboarding webinar that's done every Tuesday. You can register for that. And it kind of like the quick setup guide and the ability to, have your questions answered and to understand the add-ons and the rest of it. So this is where we're trying to go, right? So this is the scale. So if you got long in here, this is your scale. I mean, look at all this work for a couple of points. But remember, time is not the element. And what else do we know? I know you're going, really? Watch. What do we know? The market is short. Where's the stops? These guys. Somewhere. So 85. So we have 77 is the current resistance, which was there. We have 85 up here, and we have more possibilities. And that's all you got. So this 77.5 is a target. And there's more. Where is it? I don't remember. This. 61.15, not for today, maybe not ever, maybe never, but it's an important level. We might get there. Just something to keep in mind. Make a note of it, because we have shorts in the market, and the market goes up to go down and goes down to go up. The market goes up to go down and down to go up. The market goes up to a target to go down and then opens down here and goes down to a target to go up. Then the market goes down to a target to go up. Yesterday's high to a target. Then the market this morning goes down to wherever to go up to a target. or wherever. Again, that we don't know. That's part of the randomness. But we know we got the shorts sitting in here. So there's buy stops in here. So if I'm looking to be long, and that was all posted in Trader Lab this morning. By the way, if you want to find out about that onboarding and you're thinking of subscribing or you're a current subscriber, make sure you're getting the most out of it. It's how to set it up, how to install, what about the data, what about add-ons, how to take your first trade, resources, and answering your specific questions. Just so you know, you don't want to miss out on that. It's on Tuesdays. You can register for it. What's our resistance? Wasn't it there? What I do, if I get long, I wear a helmet and I scale ahead of that. So that's risk neutral. Then either we hold this outside edge and come out the top, or we rotate back down and I get taken out. How exciting. Trading. But does this make sense? Why? You understand the auction, you know why. You don't know if, you don't know how, and you don't know when. Stops are under here now. So what would happen on this trade is you'd be risk neutral. After all this, sitting through all of this, you'd be risk neutral, and then you get taken out of the trade. That's a scratch. Or you'd make a few burgers and a, Happy Meal. Outside edge. Let's watch. It's rotational, isn't it? Yeah, it's definitely not my kind of, this is just not my thing. Like, because for me, what I find is I take the same risk to go to there as I do for a 20-point trade. Because my risk tends to be around 3 points or less. 3 is pretty much the outside. And I have to trade at least a 2-lot configuration so I can attempt to get risk neutral and then use the scale to pay for the stop on my runner. Notice where I came. Does that bring us back here again? Or do we fall out the bottom? I mean, I'm asking because I don't know the answer. But that's the question I ask myself as a trader. Is it coming just back out here? Did it take me out? Nope. So the way I work is I get risk neutral. My stop stays below here, not here, below here by a couple of ticks in case we come out and pick the stops, which we might do. And then the buyers that are here, this is how I think about it. These buyers who absorb those sellers, these icebergs, are they going to show up again? Well, if they are, we can pick the stops off and still come back here. And if I get through this, then I'm coming out the other side. That's what I know. That's it. I can't know anything more than that, but I can trade it. That's what I need, right? To be able to trade. And then understand market mechanics. How does it work? Why does it do what it does? How can you get in alignment with it? That's what the auction's about. Since I don't use indicators, I'm dependent on reading the language of the market. And that's what I've done. Over many years, I tossed all my indicators because they were noise, conflict. And of course, they all work at times. That's the other part. Everything works at times. Nothing works at times. And by nothing, I mean you could use nothing and still have successful trades. So we get enamored with things, tools, that maybe have no edge, but we still have winning trades. See, that's the catch-22. Gamblers also win at the casino. But over time, the casinos are extracting the dollars from the gamblers. Isn't that interesting? Well, if we know that, then maybe if the other tools we use are just random outputs in a random environment, something needs to be anchored. Casinos only play games that are anchored. In other words, they play them the same way. That's what this is. We're playing mean reversion the same way. This is the same trade to here as this is to there, as this is to there. Same trade, guys. Does this make sense? I'm not saying it's a trade you want to take. I'm not saying you want to hang out here trading this thing. But that's what the market is at the moment. That's what it offers. And if you want to participate, you put your helmet on, you trade structure if that's your thing or however you do it. And if you're in Trader Lab or if you're sitting here on a trade desk with me, we'd be long out here back to here. That's the trade. Same trade from here. That's the trade. This is the trade. If I get over this, I'm coming back towards my levels and I'm looking for to continue on going on my path out here and higher or not. Final questions. I got about 5 minutes. And please give a like if you're in YouTube. Also, there's a link down there if you're interested in the Bookmap Discard Trader Lab community. It's open to everyone. There's no cost. This is a community of like-minded traders who've come together to leverage their collective experience. There's a lot of work in trading. You know, it isn't just sitting here. We're not playing a video game. There's research. There's statistics. When you hear me talking about statistics, that's all based on research that we've done. I've been using statistics for many, many years. Most traders are not aware. How do you fit statistics into this? Does it give you an edge? Does it help you if you get in a directional trade to target? This is an area to target. Now, there's no precision, right? Just like the low of the day was at a target. This. Yesterday's low. No precision. Yesterday's low. That's where the long came in. So the shorts were down to there and then squeeze. Then we had yesterday's high. What's that? Over an 80% probability we take it out. We did. What else is there? This. And then what's above that? More. So what do you want to do today? Do you want to be a short? Do you want to be a long? Or do you want to just go home? Well, you could trade either side. I'm currently trading the long side because the market's short from Friday. So I know there's buyers above me if we get back up into that. If we don't, I'll just rotate here, and that's fine too. And that's just trading. Final questions, please give a like. Use the link in the bottom of YouTube if you want to visit the Bookmap Discard Trader Lab community. There's a library of webinars that you guys can check out. There's a lot going on in there. It's a 24-hour, 7-day-a-week community. It's very active. I'm active in there during the day. I don't call trades. It's not my job. You don't want to take my stop. I don't want to take yours. I take stops. You take stops. It's called overhead and cost of production. That's it. And you have to kind of get used to it and accept it. If mentally you can't handle it, you won't be a trader. You have to disassociate yourself from being right or wrong. You have to be in a position, just like the casinos are, where they say, somebody sat at the table, blackjack, and here's how I deal the cards. What's going to happen? I don't know. Casino can't control the cards coming out of the deck, and they can't control how the gamblers play the cards. How can you control what's happening here in the market? You can't. So what can you control? Yourself. And how do you do that? You need a plan. How do you get a plan? You come to Trader Lab. And what is a plan? It isn't just, gee, I see a ripple in the market. That's just video game. A plan is knowing where your trade's going to show up. You anticipate your trade. That's what this was, anticipating the trade. And you anticipate the resistance. That's trading, in my opinion. And then you can learn this. It doesn't mean you'll ever be able to do it, but you can learn it. This is a language. And instead of using indicators, if you understand the language, you might be more timely in your ability to participate. So you can get, potentially, using order flow and a number of other tools, participate on a timely basis and understand market mechanics, why the market will come here. If you're in Trader Lab, you would understand that. And it doesn't mean this trade or any other trade is going to ever get to any level at any time. What it means is you will differentiate yourself potentially from other retail traders. And if you can do that, you might have a different outcome than most retail traders. Please give a like. You're all invited to Trader Lab. Use the link in the bottom of YouTube if you are inclined. And I look forward to seeing you guys tomorrow. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, circle arrow, and continue to do the research to build out your plan. Because it's only by having a plan that has a probabilistic or a statistical edge that over time, just like the casinos, you might have the opportunity to extract the dollars from the other participants. And while the outcome of any trade or any interaction is random, just like the casinos, who also pay the gamblers, over time, if you actually have an edge and the discipline to apply the edge, you have the opportunity to create a business. And that business is available for you to learn if you come to the Bookmap Discord Trader Lab community. There's a big difference between what most retail traders think trading is and what the business actually is. And we all come into the business with a fantasy of what this might be, but I'm going to suggest maybe the reality is quite a bit different. If you're interested, use the link in the bottom of YouTube. Thanks again for visiting Trader Lab, and don't forget to give a like on the way out. Truly appreciate you visiting the Trader Lab today, and I look forward to seeing you all tomorrow. Have a great day, and thanks again for visiting. And don't forget the like. Thanks.